Afternoon all, how are we doing? Afternoon Stevie. Do you know what? Every time I use stops, every time. Look at this thing now, look. Absolutely tanking. Came up, took me out, now it's tanking. This is why everybody in trading fails. They use stops. Stops just stop you out. What's the point? Here you go. Here's 1,500 quid of my money, Mr. Market. Now this thing's going to tank and make me between 4 to 6k. Guess what stops do? Drives me up the wall, prop valuations. Anyway, that's what happens when you use them. We'll get a good one. I was just having a nightmare with this account. I'm just going to, basically, this afternoon, I'm going to blow this or I'm going to pass it. I've decided I can't be bothered with it anymore. I'm using my own funds. Stop using stops. Exactly. Yeah. Well, I can't. It's just prop account. Prop accounts force you to trade like retail. Retail lose. What can you do? Trade like a bank, you win. I trade like a bank, I win. I can't trade like a bank with a prop firm. That's the problem. I wish there was a prop firm out there that let you position trade. Any prop firm out there with its brain screwed on that gave you a 15% drawdown on the account in total, I'd be managing 1 million now. Just can't get them. They just don't exist. No one's got the balls to put up 15% risk. Anyway, so Euro Swiss is now, I should imagine you probably get about a 2 to 3 ADR drop on this now I'm out of it. This is what usually happens when I get stopped out of stuff. It absolutely tanks. Anyway, so CPI in, sorry for the sarcasm, just annoys me when they do it. It's just, this is what frustrates people, isn't it? I knew it was going to do it. I had no choice but to put my stop there, though, because I was over leveraged. Why was I over leveraged? Because the prop account wants me to do 8% in 5 days, which no one can do. Just annoying. Anyway, afternoon Seymour, afternoon Brian, Frank, or put a position on without a stop. But then, let's say not CPI figures come out and it does that. The account's blown anyway, isn't it? You know, this is the game, isn't it? When you're trying to pass these evaluations, the game is not, am I a good trader? The game is, can I take trades at the time when the market is going to move in the direction I'm expecting it to move or not? Just luck. It's all luck. At least I know the Swiss. I'd be willing to bet anybody $1,000 within the next 2 to 3 days we will be sitting there. I'm 99.9% sure. It's just I can't time. This is the problem, isn't it? You can't time the market. I know where it's going. It's just the timing. It's just frustrating. But anyway, so yeah, stopped out of those. So I've got 1.5%. So when the news comes out in 4 minutes, if I vary by 1.5% more into drawdown, you'll see all this disappear. They'll shut the account. They'll blow it because I can only take a 5% a day. So if the US dollar tanks, I'm out. If the US dollar pops, I'm in. That's basically it. So we'll watch the US dollar today. Movement today, the only thing we've had moving really is these Swissies, excuse me, Swissies and the yens again. So all the yens have all hit ADR to the downside, which is lovely. So there's potential reversals on all of these yens. They've come down very, 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 very hard ahead of CPI. I'd be very wary of taking anything this side of CPI, obviously. So, but yeah, every single yen pair is at ADR. The Swissies, we've got Euro Swiss at ADR. Take it now. Get in now. It's coming down. I'm not going to take it again because I haven't got any leverage. This is the thing, I want to take this again. I can't. Isn't that? Just won't let you. They won't let you trade. It's so frustrating. But then again, when I pass prop evaluations in 1 day because I've taken 2 trades and both of them have gone my way and moved by an ADR, I don't complain, do I? So, I can complain when I lose. I don't shout when I win. Anyway. Afternoon. Gator. So we've got 3 minutes to go. CPI. No idea what's going to happen on either of these. So we'll turn Mr. Juice on. We can listen to the result. So I'll just run through my trades because they're probably going to disappear in a minute. Aussie CAD, still not gone anywhere. Just sideways, not moved. Euro US dollar, not moved, sideways. Pound New Zealand, not moved, sideways. Pound US, 3 guesses. New Zealand CAD, guess again. Oil, snap. Actually, oil's actually made some movement, so happy with oil. Oil's on my side at the moment. Everything else I've got into this week is literally side. Oh, I'm going to blow it before the news comes out. Look, I've already blown it. I'm out. What happened there?
One minute remaining. I'll leave with the US.
Oh, there you go. Euro US dollar. So I don't know why they haven't closed me out because that's 5%. So I don't know why the account's not shut, but it isn't. So daily drawdown limit is 5%. I'm over that. So they obviously haven't spotted me. So yeah, pre-market, pre-news spike. What can you do? What can you do? The news is already gone. The market's gone before the news. Just frustrating. Just cost me $500 every time I have to reset it. It's just annoying. So we'll hear financial juice. There you go. Tanking.
6.5% as expected. US CPI month over month, minus 0.1%, minus 0.1%, in line with the forecast, and minus 0.1%. Core CPI year over year, 5.7%, 5.7%, in line with the forecast of 5.7%. US core CPI month over month, 0.3%, 0.3%, in line with the forecast of 0.3%. Initial jobless claims, 205k, 205k.
See how quick it turns.
215k. US continued jobless claims, 1.634 million, 1.634 million. Lower than the forecast of 1.71 million. Taking a look at the markets now, downside movement in the S&P 500, upside movement in the Dixie.
Okay, so I'll shut him up now. There you go. So it's easier to see on financial juice on here. So yeah, basically as expected on the CPI, the core, which is the real one that we need to pay attention to, as expected. Unemployment better than usual, but it's so marginal. It's 11,000, which is absolutely nothing in unemployment. So all as expected on the CPI figures. So we've got an as expected result, which means it hasn't come down by more, which is not bullish or bearish towards interest rate changes. So we're still exactly where we were before the news. It's either going to be a 0.25 or a 0.5 interest rate rise. So as you can see, the market has no Scooby-Doo which way it wants to go. Yeah, just sideways. But why does that not stop me out? I don't get that. Quite sure why I'm still in the game. But anyway, I'll take it. Afternoon, Theopi. I can't say that one. Soapy. Seopi. No, it's not soapy, is it? Because you've got your A and your O round the other way. Am I being slapped by the markets? We're being slapped. Well, not really. Afternoon, Luke. Certainly on this account at the moment, I'm being slightly slapped, yeah. So we'll see if we get any direction off of this. Sometimes it can take 5 or 10 minutes for it all to sink in, and then they'll start a move. So we've obviously got a huge whipsaw at the moment. So they've taken everything from the market so far. So anybody that's entered in any direction whatsoever today is dead. Unless you took a breakout short, obviously, and then you're still in with your stop above these highs. So I would expect them to come up to here again. If they haven't already been there, they might have already been there. If we look at the 1 minute. Oh, they're going there now. There you go. So there you go. So that's everybody that is just taking a breakout short dead. Everybody that take a long died before the news. So we are clear to move in either direction. There you go. So this should stop out now. That should all shut. Well, it's not. Why is it not shut? It's a hard rule breach. What's going on? I wonder if their system's unable to catch up with what's going on with the amount of people being liquidated. No, the news isn't better than expected. It's as expected. So, Pete, it's all as expected. Nothing, nothing off estimate. What I was, let me just turn that down because I turned it up for financial juice. What I was expecting was actually the CPI figures to be coming out as less because they keep talking about inflation softening a lot faster than anticipated, but it's not happened. Obviously, got ADRs going off all over the place. Obviously, so we just had the weekly hit on Aussie Swiss. So ADR's going mental. Aussie New Zealand just done ADR. So movement across the board. Blimey, look at the Aussie. So just taking the liquidity at the highs of Asia today on the Aussie CAD. Aussie Swiss. It's all gone mental. Gold, just hit ADR. I didn't quite hit my... What? I didn't hit my stop on Euro Swiss. I thought I'd taken out that second one. I was mistaken. I posted that in the group as well, didn't I? No, I'm not out and flat. Let me delete that. ADRs, yeah, just ADRs everywhere. You can see what's going on. It's just whipsaw city at the moment. So let's have a quick look at the index. Jeez. My God. Okay, so I just took $1,000 loss on the other account as well. Oh, what an idiot. I think I'm going to pack up today. Yeah, so just took $1,000 loss. That's wiped out the entire morning's profit because I forgot to cancel these pendings and turn the EA off ahead of the news. You idiot. So you've just lost all the money on this one as well? Yep. That account's blown. Shut that. This isn't going well this year, is it? So far, I've lost 3 out of 4 evaluations. And the only one surviving, I've just wiped out my profit on. Oh, time to take the day off. Anyway, we'll have a look at the fallout of this in a minute. So US dollar at the moment is dropping, but we need to wait and see which way this is going to go, because at the moment all we've got is a whipsaw. So we'll see if they decide to make a move off of this now they've liquidated everybody. I can't really tell whether or not that is bullish or bearish at the minute. I think we need to wait and see. We need the Fed to come out and sort of digest this and give us some guidance as to potential interest rate changes now. So the market's going to start talking about it. Here we go. 3/4 point rate hike in February. Overwhelmingly likely. Quarter point. Yeah, right. So we're talking 0.25 now, not 0.5. As the new estimate. New peak at 4.97 after the CPI data, which is more like we're going to go for a 5 to a 5.25 interest rate increase. So we'll see if we get any more news coming out about that. See if any of the banks start to do new forecasts, and that'll give us an idea on direction for the dollar moving forward. But oil didn't make any moves off of that, so oil's just pushed, which is nice. Anybody make any moves on that? Any money, or is everybody dead? Good news or bad for the dollar? I don't know yet. I mean, like I said this morning, it's all to do with whether or not they factored that in. So with the dollar, if we look at the euro, US dollar as an example. So obviously with the euro US dollar, we've had US dollar dropping. So this is the Dixie inverse. So if you think this upside down is doing that, that's what the Dixie's doing, which is the US dollar index. So they've been dropping the US dollar. So there's Christmas there. And we opened up. Actually, let's mark it properly. So that's the 1st of January there. So really since there, if you like. So all they've done, obviously over the Christmas period, we just went sideways. All they've done since the new year is that, which is obviously the US dollar coming down ever so slightly. So we've had a devalued US dollar going into those CPI figures, and that's mainly because the interest rate forecasts have fallen from a 0.5 down to a 0.25, which means that inflation is obviously slowing, which we know. And it's less likely that they're going to increase the interest rates further than 5.25 in the next few months. But that still leaves the US dollar massively attractive. So the question is, have they factored in the CPI? And if so, are we now going to see a bullish US dollar? Or is this move the start of them anticipating a slowdown, obviously, in interest rates and other currencies accelerating towards the US dollar with interest rates and making themselves more attractive, meaning the US dollar becomes less attractive because US dollars enjoyed a very large, strong run, as we can see. So if you think about what's happened here on the Dixie, that's that. So this is the inverse. So this is basically the US dollar starting to weaken, and that started to happen in October. So I get the feeling we will be seeing a little bit more of a neutrality to a weak stance on the US dollar moving forward. But we'll see. It's down to the markets and what they're going to factor in now. So what they'll be thinking now is February, beginning of February is the next interest rate rise. So what we will see now in the next 3 weeks is them moving towards where they think we should be for interest rates. So when we get an interest rate number coming out, the market will factor in, it will price in the interest rate. So they're pricing in now 0.25. So when we get to interest rates, if we get a 0.25, it'll stay where it is. If we get a 0.5, it will go mental because we're not now expecting that. My girlfriend did $7,500 on gold. Very nice. Cool. Yeah, so don't know, dollar. Very difficult. Tell where we're headed to now. Whipsaw from hell. Euro Swiss coming back down again. Pound US dollars not gone anywhere. Let's see what the sentiment is now. So this is the 1 o'clock update. So we're 84 and 60. So let's see what it was at 1. Just refresh that. Be interesting to see what these figures change to after that news, because a lot of people would have been liquidated. 83.60, so very little change. So in 15 minutes, we'll update this again and have another look and see where everybody's lying now. Probably on the floor, dead. So there you go. Lesson for you there. Too much leverage. Too much size. But they haven't shut me down, which is interesting. Normally, let's see if I can still trade. Yeah, I'm still in. Still in. They haven't shut me. They haven't liquidated the account for some reason. I've definitely hit my max daily loss because it's on open as well, not on. Oh, is it closed with my Forex funds? Oh, it's closed, isn't it? No, but it's closed and open. Surely, no, it's closed and open. You're floating P&L. Can't hit it. I think you'll find we'll get a notification on these because I think their system's still catching up with the news. Anyway, we'll see. We'll see. If I can sneak through the net, I'll sneak through the net. But you know, this is the difference between trading with rules, prop rules, and trading your own account. On my account, nothing's changed, is it? Yeah. When that news came in, the situation was I was there. The situation is there now. So nothing's really changed on my personal account. This can fluctuate up to 15 to 25% for all I care. It don't matter. If they do that and fluctuate my drawdown, doesn't bother me. But this is how they get you, the props. You know, there's nothing you can do about it. Coin flip news. Yeah, it is at the moment. So yeah, it's difficult to tell where we're going to go. This is trading news. That's gambling. But gambling's good. I like gambling on news. It's good fun. Wouldn't want to try and make a living out of it. Right. So, very difficult to dissect what to do for the rest of this day now, because I suspect we're going to get a very strong move this afternoon. I'll be scalping playing the opening range breakouts on the indices. The NAS. Now I've got to make that money back again that I won this morning because I just lost $1,000 of it. Stupid. So yeah, Aussie Swiss. Nicely extended. Sorry. Yes, ADRs. Yeah, Yeah, so we're extended on the weekly now, and obviously we've hit ADR, but you can see we've virtually hit ADR long and short. So any of these you take today, you've got to be kind of taking them with a bit of a pinch of salt, because we don't know which way they're going to take the US dollar, and depending on which way they're going to take the US dollar is going to affect all the other currencies. As we see the US dollar starting to move, there'll be money pulled out of the other currencies to drive into it. So it's difficult to tell if any of these will reverse, or we're going to get sort of the, as we quite often do on news days, those huge ADR moves. So I would be a bit reticent about taking any of these. This doesn't look bad though. Look, so we got a nice rejection there. That's the news whipsaw. But if we get the reversal alert there, that could be the continuation move. So there's some opportunities. I can't really take anything because I'm still a bit confused as to why they haven't shut the account. But anyway, I'm not going to try and leverage any more. What I'd like to see is the US dollar go crazy long this afternoon and hit 200 ADR, because that would pay that lot off. But anyway, we need that to move first. So Aussie New Zealand, again, it's all whipsaw. We whipsawed up into it, so it's not, you're never going to get a reversal alert on it on M5. Aussie US, total whipsaws at the moment. All the yen pairs, can't do anything with any of this, can we? ADRs though, sorry, RSIs. Obviously the bias isn't going to really change on this, because all we've done really is had the new inflation figures, which the inflation figures haven't changed. So when we're looking at the differentials, let's just see what the differential was on the US dollar before. I think it was a negative, wasn't it? On most of them. Where are we? Inflation change. So you're going to find these differentials will fluctuate, because any, what did we get on the last US dollar? I think it was a negative 0.6, wasn't it? Yeah. So that is going to change to a 0, because we're not seeing any inflation change. So that will affect some of the scorecards, but only by a potential of a +1 or a -1. Not going to make any difference really in the grand scheme of things. So the inflation change column for the US dollar pairs, these will change. This will update in about 10, 12 minutes. Updates on the hour. So that one we might find we're going to get some slight variations. But other than that, nothing's really changed on the biases. So anything you're looking at with RSI extensions at the moment, as we did this morning, Aussie dollar Swiss, still extended to the upside. We've had that little bit of a push. That's not actually a bad line to keep on there, is it, at the beginning of the year? Might keep that there. Might make it black there. So yeah, Aussie dollar Swiss ADR hit, very extended to the upside. So potential short opportunity there. If we're going to continue, the market structure is really nice on this. It's just lovely pullbacks every time. We're getting really nice pullbacks. So good opportunity for a short. Dropping down onto lower time frames. You're not going to get a reversal alert. It's just a mess at the minute, obviously because of the news. So Aussie dollar Swiss is a potential short still. Euro Swiss rejecting up at these highs. Apparently I'm still in it. So looking for that to come back down and retest down here. So, my TP is 1.5% down here. This isn't going to happen in a day. Obviously, this is normal. Whenever you get an ADR extension and you're trying to play a reversal on it, you've got to think what the normal movement is. This normally only moves somewhere around about 50 pips a day. Yeah, 56 is ADR on this, and it's only 56 now because of that day. It was 50 yesterday. So if you're looking at this for a drop back down into this propulsion, that is 2 ADR away. So it's going to take a while to get back down there. So that's still valid as far as I'm concerned, but we are still unsure as to what impact that is going to have on the Swiss franc, that bank news. So pound Swiss, still nicely extended, 4 hour. We're just about coming up to a potential resistance. Nothing really clean. So we've got this area here. Apart from that, there's nothing really clean. So we're walking into this propulsion gap again. But there's nothing really clean on this apart from that level there. We've got, lots of bits and pieces around. Any of these wicks really could act as resistance. But this high, we're likely to see some limit orders triggering somewhere in this area to drive this back down. So this looks like a potential good short. We've got really obvious ADR support. So, and obviously we can come back to that candle high as well. So good short with a really obvious target to aim for on that pound Swiss, dropping down to lower time frames again. You just kind of got to get in at the moment. M15 is prettier. M5 will tidy itself up when the market starts to move a little bit more. Evil, I don't know if you're in here at the moment, but yeah, you've just posted in Telegram. Shouldn't be positive for US dollar. Again, don't know. Not sure if you're in here. So I'm talking to you if you're in here, but you're actually in Telegram. But yeah, don't know. Pound Swiss. So that's just, we just had a reversal alert. Looks like that's about to invalidate potentially and make a new high. So again, entice the shorts in, stops above the high. Entice the longs in, stops below the low. Pop up, grab the stops from the shorts. Pop back down, grab the stops from the longs. Sit there, do nothing with everybody's money. Hourly RSIs, almost everything is extended. So all the yen pairs. So if you look at all of these huge big green block RSI extensions, it's yen, 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 yen. Yeah. So absolutely everything yen is extended to the downside. Euro US dollar has just hit ADR. Right, now I'm dead. Now I'm dead. There we go. Flat. Reset. So yeah, all of those are extended to the upside. So just be careful with anything yen. This is massively weak US dollar. Look, it's not happy. So US dollar yen. So obviously we're looking at RSI extensions on these. That's just coming down to a double bottom now. Almost 175 ADR. So that could be a potential area that we're going to see some limit buys going in now. Look, you can see there's some orders triggering down here. So that could be a good little buy on US dollar yen. Very, very, very extended. New Zealand dollar yen already triggering. Pound yen, same thing. Euro yen will back off 150. So all of these basically, you've got potential longs. You've got the market on your side. Obviously, COT is positioned short on the yen, which means everything is a long. US dollar yen, pound yen, everything's long against the yen because they are short it. But it's difficult to take against the intervention. CAD Swiss, we've got an outside bar going in on the CAD Swiss at the moment on the hourly. That's nicely extended, has been extended and embedded, obviously, since we got the Swiss move yesterday, and the same for the Euro Swiss. So they're both in the same boat at the moment. Euro Swiss is coming down as well, I'd imagine. not quite as much. So this looks like a big, no, it's not. I was just going to say, it looks like a big push on the euro, but it is just US dollar weakness. Collapse. So I'm going to give that a day to sink in, really, as to see what's going to go, what we need to do with the US dollar. But we'll find out this afternoon what they're going to do. Actually, that's going to trigger my DAX again, isn't it? Oh, no, it's not. We're going the other way now, aren't we? That's right. So it's going to be a tricky open this afternoon. So we've got ADR on the NASDAQ, look, already. Look at that. An entire ADR move to the pip on the NASDAQ so far. Wow. Good luck trading that this afternoon. I think I might turn the EA off on this afternoon. I'm only running this EA on the funded account at the moment, and that's about it. So I'm a little bit not sure as to whether I want to trade this afternoon. But then again, we're probably going to get a lot of volatility. So on gold, the ADR indicator says 222. This means gold has potential to reach that high. So, wrong account. Yeah, so it's 223 is ADR today on gold. So all ADR is a measurement of the average daily range of the instrument. So on average, this does 223 pips a day. So like everything with an average, you think about a bell curve. Yeah. You have a period in the bell curve where the vast majority of results sit. And that is your average, if you like, your means and things. These extremes very rarely happen. But the further extreme you go, the less likely it is. The closer to the middle of the bell curve, the more likely it happens. So what this indicator shows you is the average range, which you achieve around about 60% of the time. And then as you push further beyond that range, the odds of it actually moving further, i.e. further out of that bell curve, reduce. So when we get down to 150 ADR, the chances of it going beyond that historically are around about 12%. When we get to 175% ADR, the chances of it moving on beyond that are roughly 6%. Beyond that means either sideways or pulling back. It doesn't mean it's going to reverse. It could just go like that. Look at Euro Swiss is an exact example of what can happen at ADR. So it pushes up to ADR and sits there. And then the next day it pushes further. Yeah. So you can't say it's going to pull back necessarily, but what it does mean is most of the time when we get up to this level, 100 to 125 is kind of your sweet spot. That you've got, if you took a short there, the edge is around about 75% as to one of two things happening, a reversal or an accumulation. So if you short at 125%, you've got a 50-50 shot really of it coming down or going sideways. It can go up and stop you out, obviously, and it will do. But like with any strategy that you trade, it's going to stop out. But that's what you tend to do. And the other thing on your side is when you get a move like this up to ADR, the market is exhausted. RSI is extended. We've hit ADR. We've got big propulsion candles. Lots of traders in institutions are sitting on vast amounts of profit, which they will start to unwind and become sellers to exit their positions. So you tend to get those pullbacks, which tend to be somewhere between a third to a half of an ADR or a quarter to a half of an ADR. So the idea behind the ADR indicator is for scalping. If you're going to take it as an entry indicator, when you hit ADR areas, you wait for a reversal alert, and then you take the short. Or if you want to use price action, you don't have to use any indicators as a signal. If you want to use price action as a signal, I mean, that is absolutely spot on for a price action signal, isn't it? Rejection, 3 rejection wicks in a row. The sellers are in control at the moment. Pending order under the low, and take the drop. Doesn't matter how you use it, but the ADR this is based on around about I can't remember how many years I tested, 15, 20 years of ADR data I tested. And all of these percentages are virtually the same within a 1 to 2% variance on every Forex pair. And it works on indices as well, and everything. Everything's got an average daily range if you think about it. And this is measuring the 10-day average. So every day we're taking what the measurement is, then we're doing the measurement, then we're doing the measurement, then we're doing the next measurement, and the next measurement. And all we're doing is we're averaging those 10, which is what I use, ADR 10. So if we are going to continue within that bell curve, doing what we normally do on a day-to-day basis, if we get up to these levels, it's unlikely we'll go further, because historically we never have. And that's just literally what that indicator does. It shows you areas where you are likely to start finding exhaustion. Equally, if you are long on gold, this is obviously a really bad day to demonstrate this because everything's gone mental. But let's say, for example, you are short on pound odd. So you got in short this morning on pound odd. When you get down to ADR, that's probably the best place to take your TP, isn't it? If we get there, because we know that there's only a 40% chance it's going to go further than that. And if it drops down to 125 before you've got out, you need to start thinking about exiting the position, because there's only a 23% chance it's going to go further. Yeah. So you can use it as either an entry signal for mean reversion, or you can use it as an exit signal for getting out of your trades, which is what a lot of people, me included, use it for. If I've got a log on, I want to get out, I will get out. So yeah, does that make sense? It's all covered in the ADR video anyway. So we've got 25 minutes to the open. Has anybody got any pairs they want to have a look at? Actually, let's have a refresh of the sentiment indicator. So 83.60. So let's see what that US dollar move has done. Nothing. No change. Let me just hard refresh that just to make sure. No change. I'm not quite sure how fast everybody else's data updates. So this might obviously not update if they haven't updated. With that Brooks strategy you were talking about, it's 11 and a half hours. 1.5 hours from start of day to end of session. Yes. Start of session. Not day. I've just built an EA to test that. It's not. It's not. I'm still testing it, so it's not working properly yet. All I've done is modified the ORB EA to try and get these ranges drawn in properly, but I've literally just modified it and saved a new version, which I haven't even tested. So this might not even work because, oh yeah, it did work. So this is that's the 1.5 hour range, and these lines are those what they call the IDR. This is nothing to do. This new thing, this IDR thing, is nothing to do with Al Brooks. He never came up with this. He was just talking about the range. But the IDR basically is, you're getting short there, you're getting long there. But yeah, so I'm just going to back test certain strategies like that. So there's an ADR, ADR, I'm calling it now, ADR, IDR, I guess, mean reversion trade. So stop above there, in on a pending. again, I have no idea what to do with profits and stuff. This is still taking breakouts because I haven't coded any of this stuff in. I've just coded it to get the lines in place. Whoop, blimey, that was quick. But these aren't quite drawing right. This is what I'm working on at the moment, just working on the maths to get this drawn correctly. Actually, no, maybe that did draw right. 11:30. No, so it should have drawn there. So it's not quite right yet. Euro Swiss 175% weekly. That's still pushing. So yeah, I'm going to test this. I've run a quick test on it for breakouts, and I don't think it will do very well with breakouts. All right, prove me wrong. It does work with breakouts. Let's do a bit more. Yeah, maybe not. I'll be surprised if this works with a breakout because it's too long. Mind you, I haven't got any settings set up to test it properly yet. So well, it doesn't lose money, put it that way. So it's not actually that bad, is it? Made 700, drew down by 800. So it's just not made anything, not lost anything. But then again, I'm not using any settings for optimization at all. Let's optimize it. Let's not do that. It's only using 50. Run that for a minute and see what happens. What happened there? I didn't set any optimization settings. Hello. Let's try that again. 200. Let's go by 200. 100,000. And let's go by same thing. And what else can we test? Let's test something else. Stop. Distance. Oh, that was using super. Oh, I was only using one lot as well. Hang on. This is all wrong. No wonder it didn't work. Let's test that on 20 to 110. Run that, see what that does. See if it gets any profit. Is this using Sphere Tester? No, this is just the back tester, normal MT4 back tester. It's not Sphere Tester. I'm just killing time until the market opens. You've got 15 minutes yet. So if there's anything you want to look at or anything you want to discuss, let me know. So yeah, Frank, New York or DAX. So basically, it's from the range open. So if you're going to use that Al Brooks opening range on the DAX, it will be from there to there. Yeah. So that would be the high, and the low would be that blue line there. So there is your 1.5 hour range, as you can see today, excluding the wick. Obviously, news days is irrelevant because it just does what it wants. But that's apparently today, in theory, that is going to be the low of the day. We shouldn't invalidate that low. Obviously, it's a news day, so it could do anything today. But so the idea is, and then the session for the DAX is really all day. But for New York, your session starts, obviously, for me at 2:30 in the afternoon, and then carries on from there. So no, nothing profitable. Yeah, breakouts on that. I don't think is the way forward. It's a mean reversion thing, or it's a breakout with a tight stop. I think that's what you need to use, that sort of, that's what it's designed for. So, the idea is we know for a fact, if we break out of here, in theory, you should never touch this level 80 to 90% of the time. So if we break out of here, I'll be looking for longs, but it's more for scalp longs. So propulsion gap moves, if you find any. So if we stick a WRB indicator on here, see if there's any. There's none in there at all. There's no real entries there at all. Right, so we don't know at this point. We don't know whether we've got the high or the low of the day in. Likelihood is one or both of those is going to remain intact. This is what I say. As soon as this lands, you still don't know which way to go, do you? So the propulsion gaps is really what you should be concentrating on. So if we are pushing up, likelihood is that may well be the low of the day. So any propulsion gaps, we can take trades out of those propulsion gaps. There's a propulsion gap. So long. That failed. Okay. And again, this is a wide opening day. So if we break out the top, what you should be doing then is looking for entries long on any propulsion gaps, because this is the low of the day. 80 to 90% of the time, if you break out of the high of the 18 candle, that's the low. So just look for longs all day. Scalps. It's a scalping strategy. And that's what Al Brooks does. He literally scouts 5-minute candlesticks and 1-minute candlesticks. That is Al Brooks. He's the candlestick king. At the moment, we still have had zero outside of this. So the high and the low of the day went in that 1.5 hours. So it's a rotation day. Rotation days, you're just going to get chopped, aren't you? But the new strategy thing is these little IDRs, as they're called, or whatever. But it's the bodies. You take the body. So when the high goes in, you take the body, and any tests of that zone, you beam revert. Yeah, so there's that one there. We are now testing it. So you would long it with the stop. Okay, worked out nicely. And then you would take an add on that propulsion. You take a propulsion gap, add there. Well, this is the day's finished. So this is, I'm asleep here. But that's the idea anyway. I will test all of this. I just need to get this built out so that it works properly. But it's got some legs, that strategy. Tony, the middle of the IDR plays a role as well. Yeah, I looked at the indicator on TradingView. I don't use TradingView. I'm not going to trade that guy. This DR IDR thing. I prefer with anything to use the person that invented it and has made millions with it. I prefer to use his version of stuff. There's some guy in South Africa has popped a load of videos up and got 100,000 views, and everyone's going mental about it. I've known this strategy for 10 years. I just haven't traded it. So all he's done is he's mixed it with ICT, whose all of his stuff is completely recycled by Larry Williams. It's all the same, isn't it? You pass it on. ICT is just regurgitating Larry Williams stuff. And the guy that invented the wide range bar, he calls it a fair value gap. It's not. It's a wide range bar. It's been around for 25 years. ICT wasn't trading 25 years ago, you know. So it's all the same stuff. It's just a different spin on it. And all this new strategy is, as far as I can see from watching the videos, is we've got a new little zone that we can use. But within there, you can obviously, if you know ICT theory, there's lots of stuff in there that you can do. But I honestly can't be bothered to learn ICT. I'm not going to build an EA around it, that's for sure, because it's just, I don't know, you know, it's all these zones and everything. Not for me. Those 15-second entries with the reversal indicator are amazing. You're taking 15-second entries. Blimey. I don't think I could trade that. 1 minute's too fast for me. Brian, according to the video, the DRRDR strategy doesn't work on news. No. So you don't use it on news days. You know, and that's the other thing about it. You don't use it on news days. What days can I use it then? Find me a day that hasn't got news. There's news tomorrow. There's news today. There was news yesterday. There's news on Tuesday. I could have traded on Monday, but it was quiet because it's a bank holiday in Japan. So what do I do this week? Nothing? You know, it's not, it's not real world. Trying to decide if I'm going to run ORB on NAS this afternoon or if it'd be smarter to stay out. I'm contemplating it as well. If I hadn't have been stupid and left it running on the DAX, I would definitely trade it, but I've just lost half of my profit this morning by forgetting I had it running. This is part of the problem with running VPSs and running EAs on VPSs. It's just trading for me, and I completely forgot to turn it off. ORB strategy in news, but you know, this is the other thing. Should I turn it off? That's the question, isn't it? And should you turn it off and not trade this afternoon? Because in my backtesting, it's run every day, regardless of what's happening. In backtesting, it makes profit. So maybe it should be left on in the news. You're going to have, like anything, you're going to have losses. But what if this morning rather, it had done that and collapsed out the bottom of there by 200 ADR? Would we be complaining about it? No. I'm only complaining because I got stopped out on a spike. If it had been a thorough move, I'd be laughing like anything else. So should you trade the NAS this afternoon? Are we expecting high volatility? Probably. High volatility is good for making money. So what we don't know is whether we're going to get a choppy open or whether we're going to get just a run for the hills. And if we get a run for the hills, we're going to make a fortune. So I don't think you can answer that question as to whether or not to trade this afternoon. I've never traded this strategy after a massive news event. So I have no idea what's going to happen. But we can look, can't we? So let's have a look at last CPI. But then again, you know, there's no point in looking at this last CPI, is there? December the 13th. Because what we actually need to do is look at the last as expected CPI, which is April the 12th last year. What happened after we got an as expected result? That's the only condition we can go back and see if we'll see what happened there or there. And are we going to get the same? Probably not. So I say just go for it. I'm just going to let it run and see what happens today. But I will make a decision as the day unfolds as to whether I'm going to stay in it or not, because we might find it's going to be a bit of a chop fest. But again, we'll know that within the first 10 or 15 minutes. I've got... let me just see what mine is set up to run. I think this is running 5:15:30. 5:15. Yeah, so I'm running 5:15:30. So I'm running it on a fairly conservative, safe setting at the moment. Bank £400 this week on that one. So yeah, I haven't got it set on. I probably wouldn't run it on 5:10:15 today. But then again, if I say that and it goes 5:10:15 and then slams out the low there and goes down like that, you're going to be very cross with me, aren't you? You can't win. I'm sitting in for the opening volatility on the NAS. Yeah, just be careful this afternoon. Obsessed with retaining IP in trading space as if he's the Buddha and never learnt from anybody else. Common lad. Yeah. ICT lent most of his stuff from institutional traders. Yeah, no, everybody is though. I mean, everything I'm teaching you now and everything I teach in the bootcamp, none of it's mine. It is mine, actually. No, it's all unique. The position trading bootcamp is unique. I don't think anybody's done anything like that, but it's a completely different way of trading. That's why no one's done it. But what I teach, support and resistance, supply and demand, wide range bars, market structure, price action patterns, candlestick patterns, there's a billion people doing exactly the same thing. No one's doing anything different. I'm not doing anything different. I just haven't recycled anything as far as I'm aware. But then again, people will always accuse everybody of recycling stuff. The opening range breakout strategy is not mine. It was taught to me by a stock trader 10 years ago, 14 years ago, actually. I've just adapted it for indices and I've modified it to take different opening ranges. So it's a modification of something that's been in existence for a long time. I didn't invent breakout strategies. You know, no one can claim intellectual property on anything in trading because a candlestick moves up and down through time, and that's really it. If you call things that are unique that you've invented, then yeah, of course you can. And I think that's where ICT comes from. He's got certain terms he uses for certain things which he's made up, which is fine. I don't have a problem with that. It's not an issue, is it? But it's all the same stuff, you know. Like I say, he does very, very well at explaining it. Sometimes wonder why they're not learning ICT at Goldman Sachs intraday desk. Good point, Luke. Think about that for a minute. I know for a fact what they're doing in Goldman Sachs intraday desk. If you want to learn it, don't do that. Go and watch this. That's what they do. They certainly don't use a stop loss on a 5-minute chart. I can tell you that for a fact. We got 5 minutes to the open. Nice call on gold. It dropped 100 pips from that 5-minute triple top. Did it? Maybe I should start trading gold. Yeah, there you go. So ADR extension, there's your 100 ADR. So it's moved its normal range. Sellers stepped in. And again, this is not new. Wicks to the upside, wicks to the downside. It's not new. I didn't make this up. It's just what happens. Yeah. All a candlestick is a representation of thousands and thousands and thousands of orders being executed in the market, basically. And if you have a candlestick that pushes up and pushes back down again, it means there was more sellers than buyers. And if that happens 3 times in a row, it's not rocket science, is it? And that's what, you know, Raja Banks does, doesn't he, on Wicks Don't Lie. Yeah, he calls it Wicks Don't Lie. It's a candlestick. All he does is literally trade candlesticks. Wicks. And he teaches you how to do it. But you can get all of this free in lots of places. It's not until you see it 1,000 times, and this is why I keep saying chart time is so important. Everyone wants to buy an EA and become rich. What you need to do is spend 10,000 hours sitting down in front of charts, seeing this thing do this 10 times and going, that looks like a short, taking it and then going, all right, it does work X% of the time. You're the indicator. You're the trigger. Diamond, well, I'm the trader. I take responsibility for how I set things up, even especially when I screw up. Yeah, exactly. Look at me. I've just blown an evaluation this morning. I set it up to high risk because I got frustrated with the market not moving, and it didn't move my way. And this is why, this is why everybody screws up with prop accounts, because you like I said this morning, you're geared up to try and get past in 5 or 10 days. As soon as you get to 10 days in evaluation, and you've had a minimum of 5 days to pass it, it's like, I need to get this done. And that's totally the wrong mindset to train a trader to do. When you get a proper funded account, you just reduce that risk right down and get realistic. You don't want to be leveraging yourself up for a 0.5% risk on a position. It's too much. Unless you're taking only 1 or 2 trades a day, which is not what I do, is it? I think they will cover wick. They will recover wick to the downside. EU, gold. Yeah, I mean, we'll get some movement when the New York market opens on these, but at the moment, it certainly seems bearish US, doesn't it? Which is kind of what I was expecting off of the inflation. I was actually expecting it to be negative. So the inflation figure, not the US dollar move, but if it was a negative, I was expecting the US dollar to drop. So the fact that they've dropped it on an as expected, I kind of understand, but still not sure we're not going to come back up and retest this. But this may have been factoring in the fact that they knew the inflation was going to go. You never know, do you? Just to play it by day by day. For resale size accounts and audience, you're correct. No one is making positional trading very accessible. No. There's a reason, I think, that there's very little education about position trading, and that's because everybody wants to get rich quick. And position trading doesn't get you rich quick. It's not going to make you a lot of money. It's going to make you consistently profitable, but it's not going to make you a lot of money. And that's the problem. No one wants to be in this industry to make a normal wage. Yeah. Somewhere between 30 to 50, maybe 100 grand a year is what you will expect if you've got a 50 to 100K account to play with. Not much more than that. But, all the people selling the courses and the Ferraris, people like, Greg Secker don't help, do they? He drives around in a Rolls Royce. He's got a mansion and private jet, and he's got lots of videos of him in his pool and his holiday home abroad. Is that setting the right mindset for someone with a £5,000 trading account to start out with? You're never, ever going to get there. It's just not realistic, and that's what they sell, and it's not what you're going to do. As I've just shown you, yeah? If you want to achieve those sorts of figures, you're going to need to get in super high risk. There's no prop firm in the world that's going to get there. So unless you've got 100 grand in the bank, you're never going to get anywhere near it. Fact. It's the way it works. Market's open. So let's see what we get on the NAS from an opening range. Looks fairly docile at the moment. We're only 1 minute in, 2 minutes in. We're sitting in a propulsion gap at the moment. But again, this is not really a propulsion gap. This is part of the whipsaw. So kind of reset yourself back to this is normal price action. Forget this lot. This is what we need to look at now as to what we're going to get. but we're coming into it obviously with slightly higher volatility than normal. So we could well get a big push today. So bear in mind what we've just experienced with the US dollar, and the US dollar is currently sitting bearish. Yeah, so US dollar is down. Let me just open a new chart because market reversal alert indicator is obviously in a TISWAS at the moment on M5 because it's whipped both ways. So US dollar is certainly coming down at the moment. And everything else is going up. So Euro US dollar is pushing, Pound US dollar will be pushing, Aussie US dollar will be pushing. So we've got a negative US dollar, which means that we should be having this afternoon a positive stock index move. Let me just open up. Put the S&P up next to it as well. So obviously initial move is down, and that will put in our opening range. So if we are going to get a continuation short on the US dollar this afternoon, we would expect a run on the indices. That's the theory. Most ICT use the 1 minute time frame. Yeah, and again, 1 minute time frame. I don't know anybody that makes money on the 1 minute time frame. Anybody. I've been doing this a long time. I know a lot of traders and a lot of people that make a lot of money in this industry, and they're not doing 1 minute time frames. No one is. Not that I know anyway. But it doesn't mean I'm wrong. I'm right. It just means I don't know any of them. I know a lot of people that teach to trade on 1 minute. I tell you every day to trade gold, but you'd rather play around with the indices. Because gold, you might tell me what to do, Soapy, with gold, but I can show you my historical trading activity for the last 5 years, and I can show you that all the instruments that I trade, gold is a negative return for me. So I could trade gold, yes, but I will lose money doing it because I don't personally get on with the instrument. If you get on with it, that's absolutely fine. Personally, I will quadruple what you make on gold on the indices because I know the indices. Or you could quadruple what I make on the indices on gold. Either way, you trade the instruments that make you profit. My P&L shows me that gold makes me a loss, so I don't trade it. And if you run any kind of tracking on your trade activity, you should do the same. Massive, massive benefit. When I became a break-even trader, what I was told to do was eliminate my losses. And the first goal in eliminating your losses is to get all the trades you've taken, look at the instruments you trade, and look at the ones that lost you the money and eliminate them from trading. I eliminated the Swiss franc, the yen, and gold because they didn't make me money. I made money on all the majors. So I stuck to most of the majors. So that's the reason I don't trade it. Not because I don't think I'd be any good at it necessarily. I can't analyze it. It's just another US dollar cross at the end of the day. The difference between gold and all the other US dollar crosses is the volatility and the violent moves you get on that, which are caused by gold spikes. If you get a gold spike happening at the same time as you're getting a US dollar drop, you get huge volatility spikes in gold, which will take you out as a position trader. So for stop loss trading, gold, no problem at all. It's just another instrument. For position trading, it doesn't fit my portfolio. That's the only reason I don't trade it. And it's because it makes me a loss. I don't want to make a loss. Obviously, no one does. But that's all it is. It's not that's the only reason I don't trade it. Short one on the NAS. Tight trailer on this set anyway, so not going to lose me a lot of money. But that candlestick pattern I just showed you on gold, that's DAX. On gold, this appears on everything. Yeah, wicks are on all candlesticks. So if I was using a stop, I could have taken a short on that. I'm not using a stop. I did yesterday, remember? I don't know if you were in here yesterday, but I traded gold yesterday for fun. Here, yeah, took a short there. and got reversal alert. So I entered short on price action, 2 wicks to the upside and a bearish engulfing. I got in short, and then I put a pending order underneath the reversal alert low, reversal alert triggered, and I got out of both in the propulsion gap. Yeah, I traded gold yesterday. Look, there you go. Target, propulsion gap. It slammed through it. You can trade anything with a stop loss on price action. It's irrelevant. I'm a position trader, so I don't do that. That's all. My indicator called that gold sell. Cool. Good indicator. Stick with it. Correction, Kenny. ICT teaches entries you can enter on 15 seconds to 5 minutes. Yeah. I don't know what he teaches. I don't follow. 0.1% with 3 to 5 risk reward a day on prop account is the bread and butter after passing both stages. Yeah, exactly, common lad. So after you pass your stages in prop, you should ideally drop your risk. So whatever you did on prop, halve it. Try and keep the account as long as you can, because you're going to hit that losing run or that drawdown, whatever you're going to hit. You're going to hit the opposite of what you did on your evaluation. No one can be perfect all the time. Many good traders I know have fantastic days, and they'll trade for 10, 15 days making lovely profits, and then they'll have 2 or 3 days which just completely kill them. And if you start your funded account on those 2 or 3 days, it's just going to hurt. Nothing you can do about it. Drop your risk though, and it, 100k account is so much. If you could return 0.5% a day on a 100k account, that's a lot of money. Isn't it? Think about it. It's just, that is a lot of money. You're returning $500 a day, of which you're getting 80% of it. But times that by 20, you're returning 10 grand a year, a month. That's just doing 0.5% a day. So if you risk 0.25% on an entry with a stop, which is like half an ADR apart away on a trade, and it moves down half an ADR, you've made $250. Most people can live on that. But if you do that trying to pass an evaluation, it will take you 2 months. And that's the thing that people can't do. They need to speed it up. So everyone goes with 1% risk, and they try and get in fast, and then they lose 3% or 4% of the account, and that's where it all goes spiraling out of control, isn't it? So if you can set yourself a goal, the best thing I think with prop, if you want to get a prop account and keep it, set yourself a 3-month target. So say, right, from now in March, my goal is to have a $100,000 trading account. Yeah, from here to March. So I'm going to give myself 1 month to pass stage 1. I'm going to give myself 1 month to pass stage 2, which is half the target. So you should really do it a little bit quicker. And then I'm going to get my funded account, and I'm going to aim to make $2,000 to $3,000 with it. If you can do that mindset, you'll win. But the trouble is that mindset doesn't exist. The mindset of I've got 5 days to hit 8k is what everybody thinks. It's just hard. Right, so 5-minute opening range break is in. This is the 15, so I'll be taking a short on that. Really hard to tell where this is going today. If we are going south, I need to be careful of my DAX, because it's going to start getting me into long positions down here, which might not actually be a bad thing, because we're coming down into an accumulation. So obviously these are the longs I took this morning. Oh, missed that. But I wouldn't mind getting back in long there, potentially. So I'm going to let them both run, see what happens today. Brokers are also incentivized by you churning your account, not really position trading. Yeah. Well, that's it. Brokers make money on that. That's the magic button. Every time you press that button, your broker makes money, either in spread, commission, or swap. Your broker's goal is to get you to press that button as often as possible. They couldn't give a monkeys whether you make money or not. Irrelevant. Their goal is to get you to press the button. Because every button press is a ka-ching. Which is why a lot of brokers give you free courses. There's brokers out there that give you Al Brooks's course. Because they know damn well that most people trading 5-minute candlestick patterns are going to fail. This is really hard work. It's quite a big drop. We got some US dollar strength. We have got US dollar strength. Look, gold's coming down. So pumping on US dollar. Pound US and Euro US will be coming down. Okay, so I'm going to add on a break of that low in 2 minutes, if that low actually breaks. Any plans to move the reversal indicator trading view? No. So you can use live price feeds. What are you talking about? All brokers have got live price feeds. Brokers usually throw you in BBook. Yeah. Yeah, so you can find similar indicators on TradingView already, usually called order block indicator. Yeah. Won't be on there for long though, because ICT will be suing them. Order block is apparently intellectual property of Mike Hoddesdon. That's what he told me anyway when he threatened to take me to court because I made a market structure indicator, which he didn't invent. But anyway, yeah, order block indicators, it's all the same stuff. Mine is not an order block indicator. It doesn't draw order blocks. It does something different. Okay, so I've got pendings on now to go long on DAX. Do I really want to do this? I'm not going to do this. I'm just going to cancel these manually for the moment. This could be a fake move and we're going to dump the US dollar, which means this will pump, in which case then I do really want to be on that. But the speed this is coming down at the moment, I'm just going to intervene with this. Only reason being is obviously this is not normal trading conditions at the moment. Yeah, you can find some stuff. Market structure is not a new thing. Yeah, it's been around since the Japanese candlesticks were invented hundreds of years ago. There's lots of indicators out there that draw market structure. The way that you draw it and what terminology you use is down to you. I don't really know what an order block is. I don't trade them. I did do the bit of the course about order blocks, and I kind of get what it is, but I don't really do it. I've got 100K in cash, but I ain't putting it into a broker. I'd rather trade prop. Yeah. I prefer Lee's logic behind the current methodology. Yeah. Well, yeah, I mean, there's no right or wrong with it. Doesn't matter what you use to get into the market. It really doesn't. It really doesn't. You just need something to get in. And I just like market structure because it gives you that little, it gets me in late. The market structure indicator is an indicator. It gets me in late. So price action will always get me in faster. A bearish engulfing will always beat the market reverse alert indicator. A pin bar will always beat the market reverse alert indicator. But the reversal alert indicator is a confirmation of a break. So it's a stronger signal. And when I'm trading H4M15 or H1M5, I'm not bothered about speed. I'm more interested in structure being on my side. Got 3 minutes left on this candle. We're just starting a bit of a pullback, potentially. So we've got a large propulsion gap going in here. Wide range bar. Whatever you want to call it. Same thing. ICT should also sue the maker of every supply demand indicator ever used. Does he do supply and demand as well? I suppose he obviously does. But again, you think about it. Think about what supply and demand is. How does a supply and demand indicator draw it? Have I got one? Yes. I'm not going to put it on that. I'll put it on something else. Right. Look at this. This is a supply and demand indicator. Oh my God, I can't see anything on this chart. What an awful chart. Right. Go out to the hourly. There we go. You can see some stuff now. Right. What is this drawing? What's that? And what's that? Resistance. What's that? Support. Somebody sent me, I came across supply and demand trading, all this stuff on YouTube, isn't it? It came, hey, supply and demand is the best thing since sliced bread. I've been trading support and resistance for 14 years. I did the best mentor that really set me on the path to making money. His entire strategy was called PASR, Price Action at Support and Resistance. He was 60 years old and he'd been trading for 30 years. This stuff has been around way before they decided to turn it into a block. So yeah, I guess if he uses support and resistance in his thing, then yeah, he needs to sue supply and demand. But you know, supply and demand was around. Have anybody seen The Life of Brian? The bloke that's selling gourds, and he says 2 denarii. That's not worth 2 denarii, whatever it is. That guy was supplying gourds. And there was a man with 2 denarii that wanted to buy them. So there was a supply and demand situation back when The Life of Brian was filmed. Not filmed, obviously, but you know, it's obviously, get what I'm saying, right? It's not new, is it? Markets work on supply and demand. Stock markets work on supply and demand. Let me just cancel these buys off. I really don't want to take these. Your supermarket works on supply and demand. Good example at the moment is that, you know, that energy drink that's out at the moment that all the kids are going mental about. Prime, it's called, by that famous YouTube bloke. I don't know who he is. No idea. It's my kids. I don't know. But there's a massive supply and demand issue with Prime at the moment. There is no supply and there's a huge demand. People are selling empty bottles of Prime for £2.50 on eBay. The thing only costs £2 when it's full of Prime. That's how bad supply and demand gets. Nothing new. It's just a term for something that is being given and something that is being wanted. Support, resistance, supply, demand, it's all the same stuff. I just wish people would stop inventing everything. This is part of the problem with education and trading. No one's got a bloody clue what anything is because it's all the same thing repackaged as something else. It goes up and down. When you trade 4 hour and for 15 or 5 minute reversals, do you pay attention to the 5-15 minute RSI? No. You could do, but you'll find that when you get extended on the 4 hour, so if you've got a 4 hour extension or an hourly extension, like a yen pair. So we're extended on the 4 hourly here. There. Yeah. So that's where we, that's not that candle, it's this candle. That candle is where we got extended on the 4 hour. Yeah. If you knock down to 15, yeah, you'll be extended on the 15. You'll definitely be extended on the 5. Yeah, because obviously low time frames move first. So the 5-minute, then the 15-minute, then the hourly, then the 4-hourly. So if you're there and extended on the 4-hourly, when you get extended on the 4-hourly, these guys, by definition, have had to get down to their extensions first. Otherwise, the 4 couldn't have got there. So when you're trading RSI, like I do, when I'm looking for higher time frames to be extended on the RSI, the lower time frames already are. So when you drop down H1, for example, there, I would be using M5 for an entry. Yeah, so we're extended here. So we'd be waiting for a reverse alert to kick in. There aren't any. So you would have had one there. That candle there would have been a reversal alert. Yeah, it's already way embedded. You don't need it. Still going on the NASDAQ. I've just been taken out of one. Just broke even on that second entry on that pullback. I've got a very tight stop running on these at the moment, which is a tight stop. That's a shame. I'll get back in though. So that's the 15-minute opening range. That's the 5-minute. So if we trade back up into this propulsion gap, I will get back in on a new entry down there. Still going there. So frustrating getting that DAX stop out. Very annoying. Afternoon, Burke. All good, thank you. Not seen you for a while. What is the opening range breakout? This is a new EA I've built to trade opening range breakouts. If you want to learn about it, it's on the website. Still going. So we're at ADR low now. So basically NASDAQ has gone ADR hit to the upside. Was that an ADR hit to the downside? 250, yeah. So basically it's gone ADR hit to the downside, ADR hit to the upside, ADR hit to the downside. I haven't got a clue where this thing's going today. Utter turmoil. Got triggered, put EU Swissy playing out well so far. Is that moving now, is it? Euro pound has just hit ADR. Got another pound, Euro pound ADR. Yeah, Euro Swiss holding out well at the moment. Pound US dollars coming down hard. Annoying, isn't it? Just too over leveraged to survive the news, unfortunately, but they're all going the right way. So all of these, if you want to get in, this US dollar is obviously powering up dramatically now, but we still are sitting inside bar on the news on all the US pairs. So until we get that outside break, we still don't have any directional bias on the US dollar yet. All we've done is whipsawed. So there's still no direction at the moment, but it's obviously bullish. So, oh god, I've just got in long on the DAX. Okay, so if this does pull back into that propulsion gap, obviously I'm just about to stop out on that. in profit. So that's the profit on that trade there. Ding. And I'm long on the DAX 3. This is awkward. So this will be US dollar retracement. Trying to remember how I've got this set up. 40 pip trailer, no break evens. So 40 is here. Okay. So I really want it to get there as fast as possible and stay there just so I can get my stops up and cover as much of this as I can, because obviously this is a big drop. So I'm anticipating some sellers re-entering in that propulsion gap on the NASDAQ. But equally, like I said, this is a support bounce potentially as well. We have rallied for the day. So this is just market adding to their longs that they took at the breakout at the open. So obviously we broke out propulsion. So they're just adding back into these positions potentially after exiting at the news. So this could go either way today. It's impossible to tell when you've got news like this. It's just, there is no bias. It's going to go where it's going to go today, and you just got to get on board and hold on. Or sit out and go and do something else, which is probably the more stress-free thing to do today. I really don't like that long. I don't like it long at all. I'm just getting ready to shut these out if we get too close. Shut that one first because that's the closest. Okay, so that is the next range. That is your second 15-minute range. Idea behind this is that if this is a false move and we're going to go long, this gets me in with a long early, which I've just done. So I do now want it to rally. I just don't think it's going to for some reason, but what do I know? I'm not in charge of the market. I'm just going to reduce risk on this lot. I really don't trust this long, that's all. So just in case. So we can see what happens here. We've got a wick there which we can test. If we see some rejection out of this area, it would indicate that the sellers are in control. If we don't get any rejection in this area, it would indicate that this was a false breakout. And we are now going to flip, which means the US dollar is going to come down. So if you're in any US dollars, anything against the US dollar short, just be careful. If we see this rallying hard, you're going to be going into drawdown on those. It's so tricky at the moment. There's so many opposing views on everything to do with dollar at the minute. It's impossible to unpick and have a bias. It's just a very, very tricky time at the moment. Well, that's got back the loss anyway. So the loss on the DAX, so that's all wiped out and back into even more profit, which is even better. It's 3 minutes till candle close, so I can really do with this candle closing bullish, which is just going to drag up my stops, which keep me in profit. So we're meeting some resistance in the propulsion gap. One more push and wicks to the downside on euro, US dollar, pound, US dollar, and gold will be recovered. Did I just read that one? No. I'm scared to flick away from this chart. Yeah, so gold basically is just traded straight back into the London Open. It's just, it's just all manipulation. It's all thievery. That's one way you could put it. I'm going to take this grand off. These are covered, the NASDAQ. I don't trust it. I'm not actually wanting to trade the DAX this session anyway, so I'm just going to take that grand and walk. Because that now gets me back up into, I was 1,300 up this morning, so it gets me, at least gets me that back and makes me a couple of $100. And we'll see what I can get out of the NASDAQ. Any opinion on grid trading? I could make it work without blowing an account. What I do is a variation on grid. So people call my strategy grid trading. It's not. Grid trading is, well, what I class as grid trading. Don't you dare. If this thing goes up into there, I shall be very cross. Never mind. Grid trading is where you basically enter a position and you have trades at limits above. So you get in short for whatever reason, and you build a grid as price pushes against you, which obviously brings your average up, which is exactly what I do in position trading. But my position trading entries are taken at a minimum distance apart when price is pushing in your direction. So what I do is use the reverse alert indicator to get me in. So rather than having a grid and you will just trigger at each of those levels regardless, I wait until there's some strength in my direction to get in. And if that is further away than that, that's absolutely fine, because I don't want to get in just because I've put a pending. If this thing's going to fly like that, what I'm going to do is get into 1, 2, 3 positions I don't want to be in. If it reverses up there, I'm only in 2. So what I found with grid trading was it works really, really well for a period of time, and then it fails dramatically. Look at the Euro Swiss yesterday. So if you look at the Euro Swiss yesterday, if you were grid trading, and people have asked me as well, and I've tested this, so don't do it. You can do it if you want. And as I say, it does work very, very well sometimes. I've built an EA to grid test ADR. And one of the reasons I've started researching ADR was for a similar sort of strategy. So I grid tested ADR. The idea being is, as you push through these ADR levels, you build a position waiting for the elastic band to snap. Yeah, which is what works, isn't it? Where grids fail is exactly the same as we had with the Euro Swiss. So for this one, for example, this went 250 ADR, didn't it? So you would pay grid, 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 grid. And you still went sideways. And the next day, what are you going to do? Keep gridding? The drawdown on this position, if you took this with 0.25%, you're looking at somewhere in the region of what, 3-4% on that position? Add this all together, that one move alone could have taken you to 5 to 10% drawdown on your account in one entry. You get 2 of these going at the same time. And again, this is why I use exposure. If you have somebody running a grid strategy on 3 euro pairs at the same time and the euro goes like that, you're sitting in 30 to 40% drawdown. It doesn't work. If you're going to do it on one instrument, the way that you can use grid, and I had a varying amount of success with this, is using a type of drawdown control. So just using the ADR grid as an example. As you push into ADR, when you have a certain number, you have a max number of trades in your grid, say 5, right? So as you push into ADR and you get here, that closes at a loss with 1% loss, for example. And if it continues to close, push, that closes. So you keep a maximum number of trades working. When the pullback happens, and it will, you calculate the loss on those. When it reaches that loss with these positions, you tighten up a stop and hope that you get a continuation which drags you into profit. Worst case scenario, you will end up with a number of break-evens on the ones that don't work. The ones that do work, i.e. it does this, which is what we're expecting or hoping, and it only gets you into 2 or 3 and then rebounds, those you make a lot of money on. I had varying success with that as a hybrid strategy running on multiple time frames using ADR, but also using RSI extensions. So I was using RSI extension on hourly, for example. Again, using the Euro Swiss as an example. Depending on which RSI you picked, obviously, you're going to get varying results. But if you entered on the 70 RSI, for example, you would have got in probably here on candle close on the hourly, probably, let's say there, for example, or there. You then set your grid at a distance. Now, the higher the time frame you go, the more pips apart your distance needs to be, and your grid should always be based on the average daily range of the instrument, because then it's dynamic to what the instrument is doing at the time that you trigger the grid. So you get in there, close out, in there. So basically I've got a grid here with an average there. I only need a 1 ADR move down to make a lot of money, and that's using RSI as a grid entry. So you just monitor RSI on candle close. When the candle closes, if RSI equals over whatever level set, trigger order. Place pending limit orders X pips apart based on ADR percentage of 50%, 25%, 75%, 1, whatever you want. So all grid strategies work to a point. Aussie, New Zealand, prime example. It doesn't matter what grid you used when this thing started to drop. You're dead. You're dead. You're blown. This thing, whatever grid you used going down, this thing never pulled back far enough to get you out of your grid. And you would just hemorrhage, die, blow. Some point in there, it's blown. And that's where it goes wrong. And this is where backtesting comes in. So I backtested grid strategies on multiple instruments and had fantastic results. I then took those grid strategies, backtested them on different time periods, and they blew the account. You can't win. Yeah, just doesn't work. The only way grid trading may work, and again, is if you stick in line with a bias. So stick in line with COT, stick in line with retail, stick in line with overall fundamentals. That may work. I've never tested it, but you can't backtest this because this data isn't available in your platform. I'm out of that. Should have stayed in that DAX long. Never mind. I'm out of the NASDAQ long. So I just get stopped out on that. Yeah, little win. That's right. That'll do. See, this is what happens when you manually watch your trades. That's what I did this morning. Look, this is history repeating itself. How stupid am I, yeah? I manually got out there because I thought, well, if I'm going to trade the NASDAQ this afternoon, I better put some money in the bank. So I put some money in the bank, and it went like that. I get in again and think, I'm going to take that off because I don't fancy it as a long. Life of a trader. But yeah, grid. I've developed lots of grid strategies, and they're all very good for a period of time. It's the same as martingale. Martingale's amazing for a period of time until it blows your account, and then it's not very good, is it? And a lot of the prop firms won't allow you to do martingale or grid strategies. They won't allow either. And if you use a grid strategy with martingale, even better. You try putting a 1.5 or 1.3 lot multiplier on a grid strategy. God, that thing produces some profit until it doesn't. Honestly, it makes... And this is what I say, if you hit any strategy you play with a grid like that or a martingale, if you hit it at the right spot, you will make a fortune. If you hit it at the wrong spot, you won't. And if you hit a prop account with it at the right spot, you'll make a fortune. But most prop won't allow you to do martingale. And a lot of them have rules against grid. For that very reason, they don't want you passing an evaluation on a strategy that isn't executable long term. But for your own bank account, do what you like. If you took a 10K account and put a grid strategy on it and you hit a good winning run for 18 months, which is not undoable, you would be sitting on 100K. So, yeah. But, and this is what the institutions and the banks do. They don't use a grid system, but they do average into their positions. You see it on, if you watch the Bloomberg channel, you'll see institutions and pension funds and hedge funds heads going on there, and they will talk about how they are averaging in, or dollar averaging into X or dollar averaging into Y. It is a highly used strategy in banks and institutions, and that is exactly what the bootcamp teaches you, dollar averaging strategy. But you have to have an exit strategy. The thing what everybody does with it is they never get out. You've got to get out if it's going wrong. You have to set yourself a pain point or a limit to say, I am really wrong on this. I need to start either getting aggressive or getting out. And that's what they do. But if you read the market right and have a bias to keep you out of the wrong side and not offside against the main participants, you'll be okay. You just have to sit through drawdown. And that's, again, what I say your account is for. If you've got a 100K account there, you've got 100K of drawdown to use. That's what your account is for. It's for drawing down into while you're waiting for trades to play out. It's not for picking the entry with the tightest stop in the world and catching that. You can't do it. No one can. Not consistently. Well, no one, put it this way, no one that publicizes their results on YouTube and trades live can do that I have found. There's a lot of people teaching it, nobody doing it. Is there? Not mentioning any name. One more push. Yeah, I've read that. Grid trading. Yeah, we're saying how the market reversal alert is lagging. Is it better to pair this with ADR alerts? Yeah. There is no indicator that doesn't lag. All indicators lag. Every indicator on your chart is showing you a representation of historical data. Yeah, you need to understand that with every indicator. Not mine, not the ones that come with MT4, every one. The RSI is telling you that price has moved up. When this thing gets to here, it's telling you market condition is up. I know that. I can see it on my chart. Moving average is pointing upwards. I know that. I can see it on my chart. There's been a reversal alert. Price has moved up. It was moving down. I know that. I can see it on my chart. Yeah? Pick an indicator. I can tell you what it's what it's showing you historically. That's every indicator. There isn't any that tell you the future. If there was, do you think I would share it? ADR is not, ADR is showing you the price levels that historically for the last 10 days we've used. Historically for the last 10 days. Euro Swiss, historically, for the last 10 days, on average, had not gone, yes, CAD Swiss, had not gone above the 100% mark. Yeah, look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. None of these went more than about 50 pips until yesterday. It did 123 or something. Yeah. ADR shows you historically what's happened. Yeah. Nothing tells you. When you're here at the hard right edge, the only thing you have to make a decision on your chart is this candlestick. Yeah. And if this candlestick, in this case, has closed below a level which gives us a market structure break, that is the decision you need to make right now. Do I hit the button on it or not? This thing is just telling you that the price has moved down. You know that. Take it off the chart. You can see it's moved down because it's gone down, 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 and down. Yeah, it's historical. Propulsion gaps show you where price has moved up. I know it's moved up. Candlestick shows me that. It's a historical indicator. Every indicator is lagging to some degree, some worse than others. The moving average crossover is the worst lagging indicator you could find in the universe. Yeah. People that, and everybody does this. I've traded moving average cross strategy. Look at it. That's where I should go long. Moving averages are crossed. I missed that. And as soon as I hit the buy button, it went down. Why do you think retail traders go, every time I hit the buy button, it goes the other way? Because you're following an indicator that's telling you what you can see on the chart. You've missed it. Like Brian's just said, price is king. It always will be. Price action rules, which is why I built the Price Action Toolkit. Yeah, this thing tells you what price action is on the chart. This is an inventory retracement bar. That's a strong closed candle. I haven't got anything turned on actually that's of any interest on there, but that paints for you. Bullish engulfings, bearish engulfings, 2 inside bars, long wicks, equal highs, equal lows, bullish engulfings. It paints all the candlestick patterns, because the candlestick patterns, when you're looking at the 5-minute chart, are the only thing that tells you where the price is going. I'm buying this. I bought this because it went up. I bought the range break up because it pushed up. I shorted it because it went down. So, as good as my indicators, I think my indicators are, because they all form part of a strategy and they tell me what I need to know. They are all lagging still. Price is always going to trump it. Euro Swiss I got into yesterday. If you look at my Euro Swiss trades yesterday, I didn't get in on a reversal alert here. I did on that one actually. Sorry. No, I did on that one. But that there was something else I got into. Oh no, it's gold, wasn't it? Gold. So this one here, I got into this here, not because there was a reversal alert. That was the reversal alert. Sorry, not there. It was that candlestick there was the reversal alert. I got into this initial entry because of those wicks and that bearish engulfing. Then I took an additional trade with a reversal alert. And look how different the entries are when I'm using price action and when I'm using an indicator. You're never going to get the speed with an indicator, because the indicator cannot paint until it's seen the thing happen. Unless you're using a predictive indicator, which will have a massive failure rate, unfortunately. So, right, so we are now back up into, so that propulsion gap there failed spectacularly. We've now made a new bull propulsion gap there, and we're trading back into this area. None of this is really, that's not a propulsion gap. This is just part of the news move. So again, we're back to square one inside the initial 5-minute opening range. Pick a direction. We are literally back to where we started. Let's start trading again. No direction today, which is kind of what I was expecting. Which, oh, look at this. That's $3,000 I just left on the table. Horrible. So ADR and venues. So if you've done my course, and there's a video on my YouTube about what a strategy is. This one. What a trading system or strategy actually is. This teaches you or shows you. I don't want to teach people to suck eggs, but this explains what a strategy is. There's a slide in here somewhere. Probably the end. Right. I thought I had a slide with all of them on there, but no. So you need multiple indicators to make a strategy. So you have what I call a condition indicator. So let's look at the other one. A condition indicator is the ADR or the RSI. Those are condition indicators, or a moving average. So these tell you the condition of the market. So when we hit ADR to the upside, the market is extended. So the condition is extended or stretched. When RSI hits the top, it is extended or stretched. When we are above a moving average, the direction bias is long. So these are the conditions. So you need indicators that tell you the condition of the market. And there are certain conditions in the market where we expect certain things to happen. So when the RSI gets extended to the upside, the condition is we expect a pullback. RSI extends to the upside, we expect a pullback. RSI extends to the upside, we expect a pullback. Yeah. So that's your condition. So the market condition is stretched or extended. When we hit ADR to the upside, we expect a pullback. So the market condition is extended or stretched. What we need when we have a condition in place, so we have our condition, which is basically green light. We can trade because we've got a condition. We know that typically when this happens, something follows, which is usually a reversal or a pullback. So then we need something to tell us when to get in. So the condition indicator does not time the market. The condition indicator alerts you to get ready. So it's like the starting gun is about to fire. Then we have a condition, which could be as simple as a shooting star or a bearish engulfing short. So if we are extended to the RSI upside, we are looking for a signal to tell us to get in because the condition is right for a trade. And for me, I use the market reversal alert indicator because there's not going to be any chart I can show you today which is going to give any kind of indicator alert that is going to be useful because this is news. There you go. So there you go. RSI extended condition. ADR hit condition. Signal reversal alert. So now I go short because the condition is stretched and the market is pulling back. So I don't want to enter until this starts to happen. I could have, if I'm using price action, used a bearish engulfing. There. So that would be entry 1. Entry 2 could be on the reversal alert, or what I could use is the retest of the reversal alert, which will give you an arrow, which gives you your M pattern. Yeah, but you've got to have a condition met. So an extension on the RSI on the hourly, drop down into M5 and wait for the reversal to start, then jump on the reversal when it starts. Don't get in because this is extended. This could get extended and embedded like this for hours. Went up, yeah, but you would not have had a reversal alert in here telling you to get short until here. Somewhere in there, you'd have had a reversal alert. But even then, you were in too early. So you get in, take a second position on the next reversal alert, and then you exit somewhere in between the two because your average price is there and you exit in profit. That's what position trading is. This is not the be all and end all. This is just telling us we're extended. Because we're extended doesn't mean we're coming down. It means we're extended. It's been a big move. And again, this is all explained in the bootcamp. And that's what the EA does, the Market Reversal Alerts EA. That basically monitors all these conditions. It monitors RSI, it monitors ADR, it monitors moving averages. It detects when we're extended, and it waits for a reversal alert to trigger an order for us. And then if that is the wrong timing, which is the thing that we can never get, it will wait for price to push further and get even more extended, the condition to be even more favorable for us. And then it will take a second entry and average into that position, waiting for the move to start. And if that doesn't work, it will push and get in again. But it also has drawdown control. Whoops, if it moves in, so that you can say, well, if we've moved 2 ADR away from where I got in initially, start scaling out of some of this position, take a third of it off, or take half of it off, or close it completely, like I just explained in the grid trading strategy. That will be done for you by the EA. So the EA basically automates everything that is in the bootcamp, which is why I built it. But I still watch and monitor all of my trades because I'm the trader, and I need to know when things like this are going on, because you're not going to get the same results. So. What lot size do you trade on the NAS? Depends what my account is. So on this account, I'm trading 250. I don't know. I'll tell you. Let's find a loss. $300 risk. This is 50K. So I'm trading just under 0.5% per position. So about I'm trading 0.3% per position, aren't I? I don't trade a lot size, I trade a amount of risk. So the lot size will be calculated for me based on the size of the range. If the range is that, I'm going to get in with a much smaller size than if the range is that. So, and the same like with the Price Action Toolkit. Where is it there? You don't use lot sizing for risk. You use a percentage of your account. So I'm going to risk 0.25% of my account going short. Yeah. Which I'm not going to. Or maybe I will. I'm using a massive stop on that. Look at it, the stop's all the way up there. But normally my stop would be last candle high. So you can flick this to change the stop to last candle high. So if I close that out, and then I go, I'm going to put a pending order under the low, yeah? So just wait for price to push up a little bit. So sell stop under the low, risk there. So you see my lot size on the last one was 3.86 or something. This is now 9 lots short because I'm risking 0.25%. So if that moves up to there, I'm going to lose $250. But I don't want to take that. I'm going to cancel it. So risk that. Don't use a lot size. You can use a fixed lot size, but if you're going to use a fixed lot size, you have to use a fixed stop loss on every trade. And my stop loss, I like to be dynamic. I don't want to put a 40-point stop on this because it's up there. If I'm going to get into this, if it goes above there, I'm wrong. So my stop is there. It's not all the way up there. So your lot size should be calculated based on where you're going to put your stop, and your risk is based on your account size. And, you know, this is why everybody blows accounts, because they're going with a 1% risk on every trade. You take 3 trades, that's 3% of your account. If you've got a 10K account, you just lost 3 grand by pressing a button 3 times. That's utter lunacy. 1% is way too much. Unless you can consistently do it. You know, if you can consistently do it, fine, do it. But I can count on one hand the amount of people that can do that in the world at the moment. So, okay, do you go live on a daily basis yet? Twice a day, 7:50 a.m. and 2:20 p.m. I used Gridwix. Worked great on reversals until it didn't. Yeah. Do you know what? Good trading strategies. I've thought of developing one. I've got loads. I mean, I've got loads. I've built loads. I've built ADR grid strategy. I built all sorts of grid strategies, and you know they do work. But I'm not looking for something that works for a few weeks, months, or you know, you could, in theory, if you picked a something like I was going to say the Aussie New Zealand. Used to be very stable, the Aussie New Zealand. It's certainly not stable anymore, is it? But the Aussie New Zealand used to be very, yeah. God, we're going back, aren't we? Yeah. It's probably more like pound New Zealand. Yeah. It used to be like this. So when you're using grid strategies in conditions like this, you'll do absolutely fine until that happens. And, you know, this is from September through to April, May, June, July, August, September. Yeah, so you've got a good 6 months where any grid strategy will have survived no problem. 6 months in a prop account with a grid strategy is going to make you a lot of money. Yeah, until it doesn't. So there is an argument for using grid. But I wouldn't want to do it on my own account because I can't afford to lose my account. It's what makes me my money. So, you know, it's just got to be very careful with it. I think I just got stopped out on a short on the NAS there. Yeah, small loss. My indicator is telling me a nice long oil position. Take a look. Target 81. Yeah, I was long on oil before I got stopped out, and I still would be in it. Oil is going to. I mean, obviously that's your target. You see my targets. My target was there. Oil's going to 107 a barrel, coming up to here this year. At the moment, with the current market conditions and the way the world is, but obviously that can change. So I'll definitely be doing longs on it. Is it technically doable to add the new fundamental overall bias to the reversal EA? Not really. Oh, it's doable, but it's too much hassle. You're the trader. Don't try and automate your life. There's no other jobs in the world you get paid a lot of money to do where you can get a robot to do everything for you. Yeah. If you're a brain surgeon, you've got to cut people's heads open. If you're a pilot, you've got to fly a plane. Yeah. If you're a train driver, you've got to drive a train. If you're a trader, you've got to trade. There's tools you can use to semi-automate your things, but you need to be on top of stuff and you need to use it. You can't automate everything. The more complication you put into any EA or automation, the more moving parts you have to go wrong, the more things will just break and fail. Simple is best. I think I say that in that video I just showed you, actually. I saw a slide. There you go. Massively true. The simplest strategies in the world are the best ones. This is the simplest strategy in the world. Any child could trade this. Wait for 5 minutes to go by. When 5 minutes have gone by, place a pending order at the high and the low. Sit back, do nothing, wait. There is very few people in the world that could not execute that strategy. I've built an EA to do it because I'm lazy, and it can do it faster. The only reason I do this is because it actually takes a while to put, not a while, it takes minutes, not minutes, even seconds, but to place a pending order and then adjust the stop, calculate the opening range size, all that sort of stuff takes a while. The EA does all that for me. Yeah, calculates the stop sizes, it does it all, puts it on the screen for me when I've got the panel turned on. But it's such a simple strategy, and the simplest strategies in the world work the best. So things like we were talking about Larry Williams earlier. Yeah, his smash bar strategy, one of the simplest strategies in the world. That's a smash bar. Go long. It's so easy. You wait for the candle to close. Is the wick lower than the wick of the yesterday? If so, take long. Go. Bang. Done. There's more to it than that, but it's in his book. Short-term, long-term secrets, short-term trading. Works today, worked 25 years ago, but it's only got one moving part, and it works. So yeah, I could put all of this in there, but also it doesn't take a second, right? So take a screenshot of this, or just have the website open on another page, right? Put that next to your VPS. Open up your VPS, and basically open up each of these pairs. Place the EA. It's that one. Place the EA on the chart and set it up to say go short, go long, go short, go long, etc., etc. Yeah. Monitor this on a daily basis. Pop in here for 2 seconds. If this has changed, i.e., if Aussie New Zealand is now not a sell anymore and I've got an Aussie New Zealand EA running, right click, close chart. I honestly say that's probably a 2 to 3 minute job a day. So having this all fully automated into the EA, the amount of money, time and hassle and potential pitfalls moving forward for something that's going to save me potentially 5 minutes a day is just not worth it, is it? When you think about it. Why did I get out of that DAX? I didn't. This is the problem with bias, yeah? My bias was not long, it was short. I'm not in control of the market. I should have let it just do what it's doing. Never mind. Still haven't made a new high though. Ways to wait for the retest. Yeah, retests on the reversal alert indicator you're talking about are the problem with retests, waiting for retests, is if you wait for a retest and it doesn't retest, you don't get in. So there, for example, there's a reverse alert, there's the retest arrow. But if this had gone that, you would never have got into the trade. So I personally just prefer to take the reversal alert. But retests obviously give you that wider W or often a multi-day W reversal. Personal preference. There is no right or wrong. Get in, get out if you're lucky. There's nothing you can. There's no better way to do anything in trading. You do it and manage your own trades. What was your max opening range for NAS today? What, opening range 1 or what? My max 1,772, 177 points. That was opening range 2, which was the 15-minute opening range. 177. So it's that one there. So it's actually about 100 and, yeah, 100 and 160 to 170, something like that. Opening range 1 is 76, 760, 76 points. What's the time? 3:45. Very difficult to tell what we're going to do today, if anything. I'm not sure we're actually going to get a move on this today. So US dollar will have tanked again by the looks of things. It's not too bad, is it? So the Nasdaq's moved a lot further than the US dollar has. It still looks pretty bearish, US, doesn't it? All we've literally done is undo so far the move. Just again, still no clue whatsoever as to which way they're going to take this yet. Doesn't look like the market has either. Mine was set to 5,000, but never opened. Yeah, so if you're only using 500, yeah, that's over. That's 760. So for you, that would have been 7,600. So your opening range is too small. Yeah, so your broker is 2-digit. So 5,000 on your broker is equivalent to 500 on my broker. The opening range was 763, which is above 500, or 5,000 in your case, which would have been 7,000 and something. So therefore, it wouldn't open any trades because you set a max to 5,000, didn't you? So the opening range here, mine's set to 2,500 because I don't want to use one. If I get a 2,500 opening range on this thing, it's gone completely mental. It's not going to do it. So I'm saying I want to go from 10 points to 250 points. So on yours, that would be on mine, that would not have triggered any entries today if I'd have set it to 500. If you've got a 2-digit broker and you've set it to 5,000, you're saying I want a 50-point range. And you will find that is more than 50 points. This is 76 or 7,600 in your case. Brian, putting it all on black. Yeah. I reckon it's, for what I can see here, we've got market structure on this at the moment is still massively bearish. So I think we might get a bit of a rally on the US this afternoon. This certainly looks like it wants to do it at the minute, doesn't it? It's whether or not we can get a really good, strong move in, or whether it's just going to flip-flop and chop around. My trailer's really tight on this. Oh, that's break even, isn't it? Not trailer, that's why, yeah. Might widen that a little bit, just because we've got quite a bit of volatility, haven't we? There's a lot of wiki candles around. So what I don't want to do is get into positions and then immediately get stopped out before it runs. So I'm just going to, on any new entries entered, I'm going to trail and not break even until we're 400, because 400's only there. That's 400, or sorry, there. That's 40 pips. I'm set to 20, which is way too tight for today's price action. Normally it's all right, but obviously today we've got way bigger volatility than normal. So I'm going to get stopped out on that one. Break even, potentially. This is a good little opening range as well. For any of you that follow Trader Tom, one of the guys in the group, Telegram group, sent me this. He has a strategy called the school run strategy, which is basically an opening range breakout strategy, but it doesn't actually do anything until 30 minutes into the session. And it takes the second 15-minute candle range, which is this. So I'm testing this out at the moment. And it's really good for catching false moves. If you get a strong move, it's really good for catching false moves. If you don't get a strong move, obviously the opening range is pretty much the same. So it does the same as the initial ORB breakout. But it's quite good at catching those, like if you push down and then pull back, exactly like we got today. So trading the 5, the 15, and having this one in as a little pullback option is something I'm testing, which seems to be pretty good at the moment. So far, so good. Anyway, we've had 3 positive sessions with it. So nice if that happened every day, but won't do. Mr. Pessimist. Let's have a quick run through what everything's doing, and then I'm going to disappear because it's 10 to 4 and we are literally just living in Chop City at the minute. So I'm just going to whiz through all the pairs and just have a look at them all and see if there's any opportunities on anything. Let's go to the hourly and watch the hourlies. So no direction. US dollar CAD. US dollar Swiss is bearish. So that looks like we've got some strength on the Swiss franc. US dollar yen's coming down. We know we've got a strong yen. That bounce we got off the double bottom. Anybody take that? We were watching that when it was happening. That bounced and is starting to retrace. New Zealand US. So just Christmas trees at the minute. So this is where we started before the news. Not gone anywhere. New Zealand's yen. So the yens are pushing hard at the moment. New Zealand dollar Swiss is coming down. So the Swiss franc is pushing hard at the moment. CAD yen 150 ADR. We'll have a look at that in a sec. New Zealand CAD sideways. Pound US dollar sideways. So again, this is where we opened today. This is where we are now. All we've done is liquidate everybody. Same with the pound New Zealand. Pound yen 150 ADR. That's a good move. So again, all coming down. Yen's massively strong. Pound Swiss is coming down. So yeah, all these Swissies, that Euro Swiss is coming down as well. Pound's holding up. Euro's holding up well. So Swiss franc is strong, but we've got a strong Euro as well. So the pound Swiss is coming down nicely. I think the pound Swiss is a sell. No, it wasn't. That is range bound. Pound CAD gone nowhere. Pound odd pushed down into support perfectly and bounced. So potential long there. This is range bound pound odd. Yeah, ever such a slight negative bias, but really sideways totally. So you could take this in either direction. Not quite extended on the RSI, unfortunately. Again, confluence. Look at that triple bottom bounce. Yeah. If this cracks again, look out below. There's an old saying, again, the same guy that taught me the opening range breakout strategy. He used to have a saying, you knock on the door 3 times, 4th time you smash through it, or 4th time's a charm. Basically, if this has another attempt at that low, it'll get through. Basically, what we're seeing is limit, obviously, profit taking, limit order triggers, and actual follow through. So it means there are buyers here. The sellers were totally overpowered. So all this move down here, selling, 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 selling. The sellers basically have run out. There's none left. So the buyers have taken control. We've hit that again and bounced again. Limit orders triggering buyers. So the sellers are continuously trying to crack this level, but there is just not enough selling momentum to get through. So every time we get there, the limit orders trigger. And it will get to the point, as usual, where the sellers just go, no, no point. We're not going to make it. So this is accumulation. If you look at this, this level here really is your accumulation. Price discovery, balance, price discovery, balance, price discovery. It's tried to get down and discover new areas to trade down here 3 times and it's failed. That's what usually happens. A lot of the time you will see this happen. If any of you know Wickoff, this will be your Wickoff spring, which is usually lower than the previous 2, and it fails. And then you get that move up to the highs, accumulate, and you push. That looks like a really good long. For me, it's just not my conditions. That one was, and that one was. So I'd have taken both of those. But this is quite extended yet. But like it, long. And you've just had a reversal out on M5. Oh, no, not yet. Just about to get a reversal out on M5. So that's good. So this is that strength I was saying in the euro. We've got good strength in the euro at the moment. That seems to be pushing very nicely. Again, we're back up at resistance. There's just battle after battle going on at the moment. You know, literally for the last 3 weeks, nothing's moving anyway. It's so difficult to make money in this sort of market condition. Yen's coming down. Euro pound has just broken out those highs for the 2nd time. So we've now got, that's confirmed as the peak formation low, market structure low. New high, new higher low, new higher high, pullback, push. Euro should be beating the pound, definitely. So any kind of pullbacks, look for longs. Euro Swiss is coming down nicely. Not quite got that alert on M15. We're just back to where we were in London. Again, no direction. EuroCAD's a mess. Not gone anywhere. Still stuck in the range. 1, 2, 3. Didn't quite, it sort of taps into the news, didn't it? So that high is getting ever so slightly higher every time. I reckon if we have another run at that, that's going to go as well. Euros are long across the board at the moment. Lagarde is talking the euro up, so we're expecting interest rate rises of 1 to 1.5% over the next 3 to 6 months. So at least, so we should be getting bullish euro. Swiss yen, huge drop. Watch this level. 175 ADR. If we get down to there, good long. How extended is that? Look at that. On the hourly, that thing's begging for a long. New Zealand yen 150. If we get down to 175 ADR today, that's a beauty. Just going to post that in the group. If CAD yen 150 ADR. Watch this. Look for potential entry there. M5. Again, you know, this price action is, we get a bullish engulfing here. You know, you could get in on that, but if you wait for that, stop under there. We've got a long way to go back up. Massively extended. Almost in the 90s. Again, go back, look at how many times we've been down at this level. Push. Pound yen's extended. You didn't get one there, look. So from that, we pushed all the way back up to there on RSI. Didn't get the move. That one we got a small pullback as well. So probably not a good one to take on the yen. Again, got to be careful with this yen. This is what I mean about this intervention. That was a yen intervention. That was a yen intervention. That one, I don't think was it? And we got that one. Yeah. And that was a yen intervention, wasn't it there? That was the first intervention. So, you know, this is why I've been saying all week, I really like it short. I don't care if the big boys are long on this. When the yen wants to power up, the yen will power up and it will slaughter everything because they have the power to push this thing, to intervene and move it fast and hard. And that's what's happening now. All of these yens are moving at the same time. They are pumping the yen. Be very careful with the yen. It's just it's turning into the old Swiss franc. People didn't used to trade the Swissy because it was too volatile and crazy, and yen's turning into the same beast now. So CAD Swiss. So again, that's coming down. So Swiss franc is very strong off the back of the news, which is good. It's trying to undo yesterday's ADR. Odd US not gone anywhere. Odd New Zealand, a little bit of a push on Aussie New Zealand as well. So another new high gone in there. But again, intraday, the sentiment on Aussie New Zealand is still short. Market is still massively short on it. So I still like it short. I traded that short from there. Odd yen pushing down, odd Swiss and odd CAD. So not gone anywhere on odd Swiss, not gone anywhere on odd CAD. So again, range highs hit. But when, you know, there's no direction on it. Aussie Swiss, it's trying to put a bearish engulfing in at the moment. We got it on the hourly, but obviously it might be a bearish engulfing in that respect, but it is also a new higher low. But you can't really take this into account. This is news, so better to sit on your hands rather than enter new positions today. Manage what you've got, and then wait and see what happens tomorrow. Short on Nasdaq again. I think I just got stopped out with a break even yet. So I'm short on this one. Does look like it wants to go short, which is lovely because it means we're going to get a strong US dollar, hopefully. But it's not showing any signs at the minute, is it? So, as Luke said, chop suey. Chop suey. My other account is sitting there pretty much where it was beforehand. It's actually better off at the moment. Apart from Euro US dollar, I'm still in DD on that. But the other trades I've got running are all doing very well or back to normal. Right, I'm going to leave that there. I'm going to carry on. The EA is going to carry on trading the NAS. So I will keep trailing on these. So that's running on a 40. So there's the stop. So I'm running a 40 pip trailer on all these at the minute, 40 points. And just see if we can get any more movement to the downside on the NASDAQ this afternoon. Or whatever, you know, I'll trade whatever direction it needs to go in. So That's all I'm going to do this afternoon, and then I'll be back tomorrow morning 7:50, and we'll see what Asia made of this. News-wise, tomorrow we've got GDP figures for the pound coming out at 7 a.m. So GDP is expected to be a big miss. We keep missing. So even if we're forecasting that we're going to do a miss, we miss by more. So I'd be expecting possibly a drop tomorrow on the pound. So if you've got that pound US dollar still on, if you're in pound US dollar short, tomorrow could be the morning that we come back and attack this propulsion gap. So all they've done today, as I say, they've taken out all liquidity to the downside. They've taken out all liquidity to the upside. So they've literally just cleared the decks ready for the move in one way or the other. So if we are going to get some strength on the US dollar off the back of this, and we get those negative GDPs tomorrow, we'll be looking at an ADR hit on this. So pound US dollar looks like a really good short at the moment. And obviously from a sentiment perspective, still right now, pound US dollar is a sell. It's the biggest sell we've got at the moment, strongest sell. Let me just refresh that and just see if those figures have updated. Where are we? So let's look at pound US dollar. That's a 0. Still a 0. So not much impact that on the sentiment at all. That changed today. Right, that's all I've got for you today. So I'll have to go and start another account. Although I might just not bother, to be honest. I might just trade my own. I'm fed up trying to pass prop accounts with position trading. It's too hard. I haven't got the patience to do it, unfortunately, because my mindset is always scalping on prop. So, and doing stuff like with the opening range breaks. So I'm not mentally positioned for position trading on prop accounts because they just don't give me enough rope. So I might not bother with that. It was an experiment. It failed. So yeah, I'll leave it there today. Anything you need, let me know. I'll be in the Telegram group. Otherwise, be back tomorrow morning, 7:50. We'll have a look at what's going on and trade the DAX. See if we can get some more moves out of the DAX in the morning. All right. So have a good afternoon. Hopefully it's profitable, and I will see you in the morning.